8 tax myths everyone should know. Follow my video and I'll explain more. Our goal is to help business owners exactly like you. So click the bell to subscribe to be notified every time we produce our best pieces of content, and additionally so we can get the message out there and help other business owners exactly like you. Does thinking about taxes make your head spin? Let's use this video and let's break some of the myths that you may have about tax, eliminate from the future so you've got complete clarity. Follow my video and let's explore this subject now. Myth number 1. Filing a tax return if there's no tax to pay. Now, ultimately and in layman's terms, a tax return is there to collect all of your information to make sure that you've paid the right amount of tax over the tax year. That's ultimately what they're designed for. Now, if there's no further tax to pay and HMRC have not specifically asked you to do a tax return, why bother? No one's going to be out of pocket of any tax, so don't commit yourself something that doesn't really need to be done. Now, there are some exclusions for that. If you're a big earning individual, you may be required to fill out a self-assessment, and also if you're a company director. Myth number 2, claiming tax relief is illegal. What a load of rubbish. The tax legislation is there as it's a load of rules that you've got opportunities to take that have been set by HMRC. So if HMRC are telling you it's completely legal to claim this relief, claim it. Because who wants to pay more tax than they legally have to? Now, before anyone jumps on the bandwagon and says, oh, Michael, people need to pay their fair amount of tax, yeah, I get it. I totally agree with you. There's services, there's everything that we need for the country to run. We have a wonderful NHS system. It needs money. But if HMRC have said you don't need to pay this because there's a relief, why don't you take it? I would every single time. Now, in practice, I've come across a lot of really aggressive, hard-nosed tax schemes that have been there just to dodge tax and they're not kind of fair. And over the last 5-6 years, they have been really squashed and these are becoming less and less and less. But what you want to make sure that you're doing is you're paying the least amount of tax as legally possible, so you're not looking over your shoulder, but also you're not wasting money at the same time. Myth number 3, I can claim clothing expenses for work. This always makes me chuckle a bit. I've lost count of the amount of conversations I've had about suits are deductible. No, they're not. What you've got in a business, if it's specific workwear, protective clothing in construction, manufacturing to keep them safe, is always allowable. So if you've got overalls and you've got special t-shirts that are completely branded up with your name on it, you're only going to wear them for work, so they meet the test of being wholly and exclusively. So do you need that item of clothing to be able to do the work? The classic is a suit. Get asked this a million times and I'll be asked a million times again. No, it's not allowable. You can wear a suit at a wedding, you can wear it out personally. It is not wholly and exclusively. It's one of the biggest tests that they use for workwear. So if your workwear is needed from a safety aspect, or you've got it properly branded up where you've got all of your logos on there, construction is the classic for that, then it's allowable. If not, nice try, but you're not going to get away with it. Myth number 4, I can claim my commute as a business expense. As a whole, this is normally going to be a no. So if you're an employee and you're at work and you're going to an office, you may live in Sutton and you work in Croydon, that commute is not going to be allowable because it's from your home to your place of work. The thing where it gets a little bit confusing is if you're a sole trader. If you're a sole trader, it would be really common for your office to be your home. So therefore, any journeys that you make going to see customers, clients, marketing, trade shows, anything that relates to the business is then going to be allowable. The only thing that won't be allowable is on the weekends when you're ferrying your children around or your family and your friends and you're doing social activities, these travel expenses will not be allowable. But what you need to define, and it's normally sole traders get this first compared to employed people, it's where is your prime place of business. But make sure every single business travel expense that you claim was to actually do business and it's not pretend. Myth number 5, my side hustle is tax-free. No, it's not. If you're earning income, which ultimately leads into profit, this is going to be taxable. So if you're sitting there on the side, you're making 4, 5, 10, 20 grand on the side income, and you go, it's okay, I've paid my tax from my employed income, you are putting yourself at massive risk because you are underpaying tax on your side hustle, which could incur income and penalties if HMRC find this. So a classic example could be if you're employed and you've got a side hustle and you think, oh, I'm paying way too much tax on my employed income, it may feel like that, but there'll be additional tax to pay on your side hustle. So make sure that you've got everything in line and you're including that income if you're employed on a self-assessment on sole trader pages, so you are paying the right amount of tax and you don't get a nasty surprise later on down the line when HMRC come knocking on your door. Myth number 6, I don't need to keep receipts. Yes, you do. So when you look at the legislation for both VAT and tax, which is both income tax and corporation tax, you need to keep the receipts to make sure that the expense is valid. Now, I get that a lot of us live in direct debit culture these days and they're sitting on email. So make sure you've got them emailed, filed, and they're easily accessible, because it's just having accessibility to the receipts that's really important. So long gone are the days where you've got to keep files and files of paper receipts. It's leading towards cloud accounting software where you can have pictures that attach to the payment so you can easily check that they relate to you. These invoices and receipts need to be in your own name or your business name for them to be valid. But if HMRC come checking, you are meant to have supporting receipts for all of your expenses that go through your business. It's very easy to get blasé, it's very easy to get busy. Make sure you are keeping as many of your receipts as possible so you don't get hit with any nasty surprises should someone come knocking on your door. Myth number 7, paying cash means that I don't have to declare it. Well, if you're receiving money for goods and services you prepared, you've sent an invoice to the customer and they've paid you in cash, yes, you are meant to declare it. It may not actually go through your bank account, but you should keep a record of how much cash you've received. You don't want to be in one of them situations where HMRC comes knocking to have a look at your cash work. You've sent out invoices to customers, so there's a definite trail and you've undeclared your tax. For doing this dishonestly, the tax penalties are massive. So make sure you don't fall into this very easy tax myth going forward in the future. I hope this video's really helped, but if there's further questions that I can help with, click my discovery call link which is below. This will allow you to book a 30-minute call with me. We can take on board any questions you may have and get to know your business, and I promise there'll be no pushy sales pitch. But if you're looking to save tax in the future, download our book, 70 Ways to Pay Less Tax. This gives you loads of insights on potential savings that you may already be taking, but you may also have opportunities. Download our book today, it's free of charge. This is my gift for you.